Welcome back to Market Day Reports. I'm Scott Shellady. Lots happening again still today. This has been an interesting one. Let's jump in and talk about corn, see what we've got going on there. But it's been moving around as we've spoken all morning. Again, giving up some gains here. We've got the December off 4.5 cents at 526.5, with a high up at 538.25. So giving up some gains there. If we take a look at soybeans mixed, I guess. And the fronts, August up 4.5, September up 1.5, November basically unchanged, off a quarter. That's a 13.27 even in the Novi. That's the new crop beans. We can take a look at what's happening in the wheat, Chicago wheat. Chicago wheat's, well, we got July up a penny, but let's really focus on Sep, down 2.5. That's 619.75. The Dees is off 2.5 as well at 628 even. We can also take a quick look at the hard red winter wheat. We haven't spoken about this. That's a good one. It's up today. September up 4.75 at 589.25, and then I'll jump right over to spring wheat, see what we've got there. But that's also higher on the day. We should focus more on this because it's kind of a little bit of a good news story. September up 5.5 at 813.5. Well, on the line we've got Ted Seifried from Zaner Ag Hedge. Ted, you and I go way back. What would you be talking to me about if I was one of your customers and I hadn't hedged anything yet this summer?
Hey, Scott, that's a great question. Sort of same thing I've been saying for, actually, I'm going to say the last 2 years, in this sort of climate where we have these higher prices or potential for even higher prices. We're using cash sales to manage our downside risk, and then we're using the board, mostly call options or call spreads, to manage our upside potential. Because, hey, let's be honest, that's why we don't sell, or things that hold us back from selling are the idea that we could do better, or maybe the idea that our neighbor could do better, and maybe they'll rent the ground that I'm hoping to rent next year. And so, we want to try to maximize those profits absolutely as much as we possibly can, especially, strike while the iron's hot type thing. But at the same time, we really need to manage the risk to the downside. And I feel like right now there's a fairly tremendous amount of risk to the downside. What it all boils down to, Scott, is what is the weather going to look like in a week or two? Is this just been sort of a one-off week caused by a hurricane, a change in the weather pattern, but is it temporary or does it hold? If it holds, well, then I think we have a fairly significant amount of downside potential, because what we'll have to do is we'll have to go back and find that demand. And for soybeans, we might have to bring soybeans down to the mid to a low 11s to really get China in as an active buyer if they don't see a weather concern on the horizon. Now, if we come back in at the after the weekend and we are worried about what we see on the long-term maps, and by the way, the 30-day forecasts are still really rather concerning. But if we come back in and the 6 to 10 and 8 to 14-day forecasts are really concerning, maybe they'll come in and start buying, and maybe we don't have to see a break. It's really going to be weather going forward. Longer term, I still see higher prices. I think we'll make new highs in soybeans as long as that demand's there. But at some point, we might have to come down and buy that demand back a little bit.
Well, we're going to go to break in 1 second, but I'm going to leave you with this fact, just so everybody out there knows how difficult Ted's job is. 3 times in the last 2 months, we've seen corn rally a buck each time, and 3 times we've seen it break a buck each time. So 3 times $1 higher, 3 times $1 lower. That's going to make anybody's skin crawl. That shows you how volatile and difficult the market is. So we'll be right back after this to talk about proteins with Ted. Welcome back to Market Day Report. I'm Scott Shellady. We're still here with Ted Seifried. Let's go take a look at these live cattle markets real quick, just so that we have something to talk about, right, Ted? So live cattle, let's review the prices down in sympathy here. We've got October at 125.60. That's off $1.10 from a high of 126.57. Why don't we take a look at the feeders? Feeders hit a 3-month high yesterday, which was quietly not known. October off $1.20. It's 162.30. The reason I think it's still showing some more weakness here is that the technicians were looking at something what we call a bearish hook, where we set a new high, but we had a lower settlement. And that then is a sell signal to some of the technicians out there. I think that's what this market's suffering from just a little bit today. And then over here with the lean hogs, mixed market, we've got August off 30 cents, basically unchanged. We've got October up 35 cents. August is at 100.10 still, and the October is 84.10 as well. So, Ted, What do you see in these meats or proteins that you're going to be talking about more to your customers today? Give me some color on what the feeling is out there.
Yeah, so to your feeder cattle comment, it's amazing how when corn reversed off its lows yesterday, feeder cattle reversed off their highs, right? So that's the concern, that corn's trying to defend this 100-day moving average, which it has done so many times in the past, and it's bounced from that. So there's concern in the feeder cattle market that that'll happen once again, and that'll take feeder cattle down a notch a little bit. In the meantime, I'm raising the red flag in cattle. You look at the August live cattle. We tested the 100-day moving average yesterday. We bounced off it. Today, we're testing it again. We're actually through it. If we close down here below, this sort of breaks us out of our what we were hoping was a bull flag formation on the chart. And this might be a bit of a breakdown to the downside. It might mean we go back down to the lows that we saw in late May, right around the 115.50 level. So that is a concern. We're watching that very closely. And as far as the hogs, we try to gain some strength. We're trying to carve out a bit of a low. But every time we do it, we kind of set back a little bit. It's getting a little frustrating. But what I'm going to say is fundamentally, I'm still rather bullish hogs. I'm a little worried about weights and animal numbers out there. End of August timeframe. I'm looking at that October contract, thinking that's quite undervalued. I do think domestic demand is going to stay strong. Cutout values should rebound and come back a bit. So I'm looking up at the gaps that we have above us. In August, that's 112. I think at some point we'll go and fill those.
Well, that's, it's great that you talk to technicals, because I don't think we talk about them enough. Obviously, it's a weather market in the grains, but the technicals are a great way for investors and producers alike out there to kind of go find something that will help bolster their opinion or give them something else to talk about. So thank you for bringing that up today, Ted. That's Ted Seifried with Zaner Ag, and that's going to be it for us in the proteins. I'm going to have to pass it over to Tammy.